What's up guys, it's Nathan here. Get ready for a financial shakeup. Today we're going to break down the Reserve Bank of Australia's expected rate hike and its looming impact on your wallet. The Reserve Bank of Australia might increase the official cash rate by a further 25 basis points as early as tomorrow due to persistently high inflation. Recent data showed that a rise in yearly inflation rate from 6.3% in March to 6.8% in April has come through. And this increase has mostly been because of the fuel excise, which was cut in half a year ago, but in other areas like rent and travel, which are remaining high. If we did see the Reserve Bank increase the cash rate to 4.1%, it would actually make it the highest since April of 2012. An additional 25 basis points rise would cause the average borrower who had a $500,000 mortgage before the rate increases started in May of last year to pay an extra $1,134 per month. This is a 49% increase in the cost on a mortgage since the rate rises began. Economists are advising to prepare for up to another 3 rate rises in the near future. And this is where if you do have a mortgage, it might be worth having a chat to your bank to see if there is anything they can do to reduce your rate, even considering fixing in if you are concerned that rate rises might continue to persist. Here at Galloway, we're a mortgage broker. Feel free to reach out with us if you did want to have a chat and for us to understand your situation and give you some tips and tricks and ways you might be able to actually get your mortgage down. Following the announcement of one of the most significant minimum wage increases in the last decade, the Reserve Bank is looking likely it will raise the rate beyond 4% in tomorrow's meeting. Moreover, there could also be an additional 2 more rate hikes before September alone. The Fair Work Commission has raised the pay rates for over 2.4 million people on its award by 5.75%. And for 80,000 workers not covered by an award, the increase is 8.6% or $70 per week. This decision led money market traders to increase their predictions that the Reserve Bank would raise the official cash rate from 3.85% to 4.1% in Tuesday's meeting. Now, the increase in the award pay is the largest we've seen since 2009, and it's on top of last year's increase of 4.6% to 5.2%. Employers are concerned that this could lead to job losses and reduced work hours due to the additional financial pressure it would put on businesses. And if you find value in this video, please consider hitting that subscribe button, as it really does help out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. The Australian Council of Trade praised the decision, stating that it was a historic increase to the cost of living. However, they urged the Reserve Bank of Australia not to raise the rates to offset the minimum wage increase. Meanwhile, business groups have warned of potential job losses due to added pressures on inflation. The Fair Work Commission actually stated that the pay raise for award workers was below inflation to avoid exacerbating higher inflation expectations. The increase is expected to affect more than 20% of employees, making it the largest increase since the Fair Work Act was established in 2009. Economists are now expecting further tightening of the cash rate due to accelerated services inflation and low unemployment rates. Some predict that the cash rate could even hit 4.6% by November. Despite this, some believe that the wage rise was broadly in line with Reserve Bank of Australia's expectations and the effect on total wages will be modest. The ongoing housing crisis has led to criticism of Philip Lowe, the head of the Reserve Bank of Australia, following his suggestion that Australians should consider staying with their parents or acquiring a flatmate to mitigate the impact of soaring rental rises. This statement was made during a Senate hearing. Lowe indicated that the rental market's immediate problems can't be easily resolved due to the lack of sufficient housing construction in relation to population growth, which is resulting in hikes in rental rates and living costs. He argued that increased rental rates and house prices may discourage individuals from living independently, thus encouraging a high density per residential property household. Higher prices encourage more people to reside in each dwelling, and that's a necessity, Lowe stated. His comments were understood to imply that elevated living costs would force individuals to save on living costs, whether by children choosing to stay at home and living with their parents longer due to exacerbated rental costs, or individuals opting to share a living space with others. Lowe's remarks led to speculation about potential rate increases in June, causing distress amongst Australians who are already grappling with mortgage increases, higher rental costs, and elevated costs of living. There's a widespread sentiment that Lowe, earning over $1 million annually as the Reserve Bank of Australia's head and residing in an upscale suburb in Sydney, is out of touch with ordinary citizens struggling. Many have suggested that Lowe could make a symbolic gesture by taking in flatmates in his own 5-bedroom Randwick home. Others have expressed their concern over the feasibility of its proposed solution, particularly parents and those facing difficulties affording housing costs for their adult children. Some argue that the high cost of stamp duty deters homeowners from downsizing and have proposed an annual land tax as a possible alternative, encouraging homeowners to move their properties that align with their needs. And remember to like, share, and subscribe to stay informed with all things property and finance. And amidst the ongoing debate, Greens leader Adam Bandt expressed his views on Twitter, highlighting that the housing crisis has led to overcrowding in shared homes, a situation that is infeasible as a long-term solution to the flawed rental system. So that's it for today, guys. Did you know here at Hunter Galloway, we're a mortgage broker and deal with people Australia-wide. So if you need assistance with finance, feel free to reach out with us at huntergalloway.com.au, where you can fill in a contact form or call us directly on 1300 08065, and we'll see you next time.